Hello traders, it's Pierre here again from PAFX, and we're gonna take a look at a crazy week ahead of us for us traders. There's a lot going on in the market next week, so I hope that all of you get ready with your plans ahead of the week, before the week trading week start, and that you really do not risk a lot for the next week, because I think we're gonna have a really bumpy week ahead of us. Welcome everyone, welcome to all of you, old viewers and new viewers. If you are new to the channel, please do subscribe to the channel and click the notification button so you get notification every time we are live or every time I upload a new video. I will just let you know, guys, that I am now taking the registrations for the next course and next batch that gonna start in April. So the registrations are open for the next course. I have an ongoing batch now, and as you know, this batch is full, but it's gonna end at the end of this month. And those of you who want to join the next batch are welcome to contact me at Facebook or info@pa-fx.com. So let's get started, and as usual, we're gonna start with the disclaimer. Please read it carefully and know about the risk involved in trading. This session is not a signal in any way. It's only, as usual, the way I see the market and the way I may trade the market. Yeah, welcome guys, welcome to all of you. Many of you are here today. As for now, 26 viewers, but only 15 likes. Come on, hit that like button, guys. Yes, we start the week already with some news. Today, the Italian parliament election is going on. As you may know, it's very important to see which party will win this election. It's important that we don't have something that shock the market, center or far right. If they win a coalition, they may give some negativity for the euro. And one positive thing for the euro was as well that the Germany's SPD members approved coalition with Angela Merkel as well. So this is positive for the euro. So the market gonna read this positively, and we do have the Italian election that's going on right now. If that was not enough, if you look at the news for the next week, you see why I said it's gonna be a bumpy ride. We start Monday with sterling service PMI, which is very important, much more important than manufacturing or any other PMIs, because service, I think it weighs like 55% of the Britain economy, so it's very, very important number. Tuesday we have the Aussie current account, retail sales, cash rate, and the RBI rate statement, and law we speak as well later. Wednesday, GDP quarter-on-quarter for the Aussie, and USD ADP non-farm employment change. Then we have the CAD trade balance, BOC rate statement, overnight rate, crude oil inventories, and for the euro on Thursday, minimum bid rate, ECB press conference, Polos for the CAD speech, and Friday, Super Friday, where we do have the BOJ policy rate, monetary policy statement, and a press conference. As usual, JAPI is gonna be tentative. We don't know the timing. And later on, of course, for both the CAD and the USD, very, very important news for the CAD employment and unemployment rate. And the NFP for the USD. For the NFP, I will be looking more for the hourly earnings on the numbers. And as usual, mixed numbers may give the market spike up and down and then nothing. So we are looking for the better if we got only green number or only red numbers, but that does not usually happen a lot. So keep an extra eye on the average or hourly earnings. That I think that number gonna be the number that everyone gonna be looking at for the NFP. So as you see, guys, it is a really full packed week with news, and that's why I'm saying you should be trading with low risk. If you're new to trading, you probably should just be watching the market, see what's going on, what will happen, and maybe you have better chances the week after when the dust has settled. But anyway, we have charts to look at, and we're gonna do that, and we will start with the Dixie. We'll start with the Dixie on the weekly chart, guys. You know that we've been talking about this important level since the first touch here. That was around the January, the mid of January, when we start reaching this important level, and I said this should act as a possible support because it was resistant in the past. And since then we had 1, 2, 3, 4, 5, 6 weeks we couldn't make a new low below that, and the market been trading sideways, and that shows that this level is still defended very well, but the bears are defending as well this important level at the 90.50 or just above that. The 91 is defended as well. For lower time frames, I said as well last week, if we want to see continuation higher on the Dixie, we want to see a break above this important structure, then maybe we have a chance for a continuation. And that short term, we wanted to see a break of this neckline here. Now we had a break of that on 1 daily candles only, but then Thursday, as you see, was a bearish engulfing candle, and Friday was another bearish candle pushing down. But still, the most important in this leg to the upside here is this low down here below this doji. The low of that doji is 89.53, 52 area down here. This level is very important to hold if the Dixie will continue moving higher. I made this channel for you to take a look at it. Very important channel as well. 1, 2, 3, 4 touches to the highs here, some touches to the lows. It was a very leggy channel. We left outside the channel for a while, some noise. Then we entered inside the channel, could not really break and continue above the mid of the channel. And now we are back inside that channel. Still, the most important levels short term, guys, is down here where we have this this high at the 91 is an important level. This is the 50 moving average, and here we have the 200 daily moving average. On lower time frame, you see on the 4 hour that we actually did break this high. So this structure is now broken, but we still need to break above this structure as well for a possible continuation higher to reach these levels up here. What I have here is a possible ABCD, the blue one. This could be a possible move. As far as this low is not taken out, we still see this blue ABCD as a possible move. And we have as well another major one, depends on where the market will end this leg to the downside. So if we pretend that the monthly pivot point gonna keep holding the price as a good support, just below that we have the 200 moving average on the 4-hour. We got a crossover between the 50 and the 200 now as well. So I am seeing this as important structure level here as a good important level. So if we do have a bounce from here, then I will start looking for the completion of these A, B, C, D scenarios. But let's take it one step at a time. So for next week, you want to see this level holding as support if the Dixie gonna have a chance for at least another bounce higher, because we don't want to see this low broken, since if that happened, there is no structure until we move all the way back down to 88.50 area. So very important level to keep an eye at down here, where the price is testing right now. Could be as well as a possible area of support on the monthly pivot point, just above the 200 moving average on the 4-hour. And the real bias changer gonna be if we break above this important structure. If we break above the 91 and we hold above that, then we gonna be testing much higher, and the level of resistance, the major level of resistance, gonna be up here around 92.50 area. So those are the scenarios for the Dixie. Keep an eye on this important level short term. This level up here, the 91 level, gonna change the down, major down move bias to possibly reversal to the upside. Let me see. Karim is asking, could you please tell me how to enable toolbox, which is available on the left side? I am unable to watch. Do you mean this one here? Because I think this have been there all the time. I have no idea how to take it off or put it back. So no idea at all, buddy, how to do so. I never think about that. But maybe you can take a look inside the properties here and see if you can put it back to the left here. I never changed that, so I have no idea how to take it off or put it back. Yes, let's keep going, guys. We have a lots of charts to look at. Gold kept moving lower as we've predicted at the touch up here, and then we've been looking at the 4-hour time frame and talking about this bearish engulfing candle and the importance of this level as a possible supply level. And we did reach targets down here. We've got some kind of a possible A, B, C, D that ended just above the completion of the move, looking at it like this, and it gave a really nice bounce from this level. I still see the 1300 as a very important structure here that if broken, then we have, as you see, a lots of room to the downside. Looking at this, there is no structure before we reach down here. So we do have very important structure here, but as well the 1310 is as well now important support. As you see, support here, rejection and close above 1310 once again. So we do have some levels to work with. In this particular time frame, we keep making major lower lows and major lower highs, and I am looking at first level of trouble is the monthly pivot point around the 1328 1330 area. It was an area where we did a lots of tests, and it looks like a possible flip zone here. As you see, resistance and support many times tested, many times in the past, and I still see this flip zone as a first level to look at for next week. If you want to short this in a continuation of this move, then it's gonna be from the monthly pivot point area up here, following this possible trend line. Yeah, we still have 1-2 touches, and a possible third touch could happen here, where we do have the 50 moving average as well coming from above. So as first, you keep an eye on the monthly pivot point for a possible bounce back down. I think the market was showing it what it wanted to do here. It wanted to reach lower, it couldn't. So now let's see what will happen on the test of this level, if we're gonna get another bounce or break above, retest, continue to that another important level, the 1344, gonna be as well a very important level. So these are the levels for the gold, and there is a big possibility that we do see some sideways, maybe trade inside the lower range as well, due to all those news we have next week. That may happen, that we got a little bit of cautious market that don't want to really take any risks and see this going sideways. Oil, perfect move toward our kill zone that we've been talking about during the weekly overview of last week. Shoot a little bit higher above that, but then after getting this bearish engulfing on the daily, it was a clear signal that we may now do another impulse to the downside, and after that we've got a very, very nice retest to that 618, and boom, back down to the downside. This candle was made during the crude oil inventories, and it was a perfect example of break, retest, continuation. So as for now, I still see there is a possibility that we test this important structure once again, but Thursday and Friday, as you see, we've got a couple of pin bars. The price was rejected from these levels, and it makes things a little bit tricky, but for me it could be only the market showing its intention to move lower, and to really take a good trade here, I think the levels we should be looking at is down here at this structure. If the market reaches this structure here, then we may get a bounce from that, or another retest higher toward the previous neckline. You're gonna see it better on the 4-hour time frame. You had this possible head and shoulder, and this is the neckline. I think this area up here gonna be a possible kill zone for this coming week, and that we get another sell possibility from this level up here. Yeah, down here the 59 area toward the 58 gonna be a very important level, but as you see, very strong move to the downside, major low. Now we do have a major lower high as well. So there is, in my opinion, more possibility that we do retest these lows once again. Mariana, I'm not sure what you mean. Will you please explain again, and I will try to answer that. Aussie New Zealand, first Forex pair we're gonna look at. We've got a very nice retest last week toward this major support level that of course is now a major resistant level. After the break we have many tests to break back above, couldn't happen, so this retest was a very easy pick to short it. Looking at after this break, and this candle was all the way up here but got rejected all the way back down. We got another test and got rejected and made new lows. So this retest here was a very easy pick to short it. We are now as well keep holding below the below the 200 daily moving average, and I still see there is a possibility that we reach at least the monthly S1 or this structure down here probably for next week. On the 4-hour we could look for possible Fibonacci retracement. Now the 38.2 already reached. This 4-hour candle could be some position closing for a day trader that took the long here, making this candle. So there's no it does not need to mean that new bears did sell the market here. The best level would be up here at the neckline in the 61.8. Fibonacci retracement. That would be a good level with good risk to reward, at least a 1-to-1 until we reach the first possible support, and longer term that we do reach even lower. That's what I'm looking at for this for the next week. A very strong impulse move to the downside. What worried me a little bit that we never broke below these lows down here. That would be much better if we did a break and then this retracement. So we should be a little bit cautious on that, but it is, if we reach the 61.8, could be a possibility to short it. And as I said, first take profit should be these lows here because they may act as support once again. Aussie USD, what a trade, what a call. We have these couple of weeks since I called this in our trading room, the retest of the 618 structure retracement, sorry. We've called this short, and since then it's been doing very, very well. Another break, retest, and continuation. Now we did reach a support level that we expected some trouble at, because it is a very easy level to see that we may have a trouble at here. As you see, resistant many times in the past and tested as support as well. So the price is now sitting at that support level just below. We broke below the daily 200 moving average. It has not been really respected since it have been ranging here inside this channels. So the 200 is not the best thing to look at right now, but we've got this rejection back above, and it is an important support level that we should be looking at. Looking at the 4-hour time frame, you see as well we had another possible A, B, C, D here that ended somewhere here. Looking at it like this, and what is not very good on this, that we never had any real structure to work with below that. So for next week we are looking at this possibility that we may get another retest of the lows and a bounce back higher toward a monthly pivot point, or any break of this previous structure. Then we could be more sure for a continuation lower on this pair, and that we should take profit somewhere at the end of the D leg, or at this major trend line coming from below. As you see, 1, 2, 3 swings being tested, this major trend line, and a very important trend line now. And I personally think that there is more room to the downside, but now since we have this possible rejection, we should be looking to see if we gonna break these lows or not before taking any action, because this market could now find support at this important level and push back up toward monthly pivot point very easily. Yeah. CAD Chief, a major waterfall on this pair, as you see, been going down all the way here with almost no retracement, one could say, but as you see on the daily structure, there was some retracement, and you will see them much better on the 4-hour time frame. But no one can argue how fast this been going down. Now did reach monthly S1 already, and very major and big candle. Looking left, we do have the neckline and this possible minor support level. Of course, the major ones are down here at this structure, and the Trump election candle wick down here is another one. So downtrend, and we should be trading in the direction of this downtrend. I still see if this pair now will bounce from this possible support level, that you can see any retest toward monthly pivot point up here, this area. As far as we do not break and close above this structure, then you can try another short toward monthly S1 or even lower. Any break above this structure or above the monthly pivot point, that could mean the downtrend is about to end, and a possible retest even higher, a deeper correction could be possible, since this looks to be very, very extended. We don't want to chase the sell, so better to wait for a correction higher before to sell it. And once again, the monthly pivot point area is a good level to make a try on that. CAD Jappy, almost the same structure. It's like a copy and paste. And yeah, we've been following this for a while, guys. It gave us a lots of good shorting opportunities since I mentioned it, since the break of this neckline. Then when we broke this one, I mentioned it one more time in my weekly overviews, and I hope that you all been paying attention to this pair, because it been giving a very, very strong move to the downside. And looking at it structure wise now, I don't see anything to stop it before it reach the lows back down here just below the monthly S1. As you see here, this gonna be a very, very important support. Otherwise we have even more pips to the downside. So how to play this? Once again, we don't chase it, look for any corrections. The bad thing is this market is in a hurry and moving very fast, so the correction have been very, very shallow. So one could play flags as well, or any consolidations like these ones. This is the way to play it. Wait for after the impulse, you're getting flags, impulse, flags, or channels to work with. Every time these channels or flags got broken, you can take a sell, since this market is not making deeper corrections at all. It's only making impulse, sideways, and then another impulse. So now we do have this impulse after this channel. We could be looking for another flag or sideways and a break of that to take another short, if you're not already in you having a short already. But as you see, the the 20 moving average and the 50 here, the area between those on the 4 hour could be a good dynamic support and resistant, dynamic resistant for you. You can follow the 20 and try to short it on the touches as it happened here, or go with these flags and break out of these flags. If you are holding a short on this one, I think that there's nothing left now. I still see a very possible scenario that we do reach the lows down here, even though the RSI is oversold and stuff like that. But it's been breaking all the major levels, or the Fibonacci level got broken, and no structure left looking left. Swissy Jappy, let me take off some moving averages. We don't need all of them right now. Sitting at a very important structure as well. For a couple of weeks in my weekly overview, I said that we did reach an important level here, and then we got a very nice rejection from this major trend line, and we had at that time the 200 moving average at that level, and I said this is an important support. We should keep an eye on that, because if broken, that we're gonna get a very nice momentum move to the downside. We did get the break and the momentum move, and now we reached another important support level. I think this is a very strong support level, and where the market is testing right now is a level where you should paying attention. For any bullish signal here may send this market back up to retest the major trend line or the monthly pivot point. What we have so far is some wicks coming from below. The bodies of the candles are getting much smaller now, and we do have some bullish divergence on the RSI. As you see, the RSI is making higher lows and the price is putting lower lows here. So keep an eye on this pair here. Down here, look for a small time frame on 1 hour or 15 minutes for this channel. If it's gonna get broken, probably another retest, and it may give you a bounce to the upside based on the support level itself where we are right now, as I showed you on the daily, and based on the bullish divergence on the RSI, and at the looks of these very small bodies candles, there's no strong pressure as we had previously. As you see, every time we moved lower, the bearish candle was much bigger bodied candle until we reached this level. Something has changed here, and of course that could be because of this important support. Because if this level is broken, guys, if you get a full bodied candle close below this 112.500 here, then there's nothing left on the way down until we reach and close this gap, and probably even lower toward this swing low down here. Is the market ready for such a move? I don't know yet, but what we know is we go with the if-then scenarios, and the if-then scenario here, if we break and close below that on the daily, then we're gonna keep shorting it to the lows back down here. So for next week, as for now, keep an eye on this structure. Look for a possible long. We may need to bring some buyers, some more sellers from these levels before we continue back down again. Yeah, very interesting structure and a very interesting trade to look at. Euro Aussie, it was pain trading this pair, waiting for the break. as you know, guys, we've been trading every touch from above of these highs, and I was thinking that this could give us a break of the lows here and at least reach the trend line or this neckline. Now that didn't happen, and last week we've been talking about this trade a lot in my trading room. But what was good that during this move to reach this level, I said, guys, we should hedge this trade or take profit, since this area been acting as good support, and the lows are getting a little bit higher here, as you see. So we had the move from up here, and I hedged it, and some in my room hedged it as well. And when we got the break after this candle, I released my short and kept the longs, and gave a very nice move to the upside, and we reached the monthly R1 before we got some rejection back down. So now the game rules has changed. As you see, we do have a broken range that may act as a possible support and possible continuation. If we look on the weekly, you see that this was an impulse. This could be what we had as a correction, 3 weeks of sideways before we got another impulse here. And looking left, guys, there is nothing on the way anymore until we start reaching the top of these wicks up here. So the first trouble area, if this continues higher, gonna be these highs up here, or all the way toward this weekly wick here, as you see. So broken high here, we keep making higher lows and higher highs. We ditched this shorting idea, and now we follow what the market is telling us, and it seems like the market want to keep go higher, so there is no need to fight it anymore. How do the news affect your assessment on the charts? I'm not sure what do you mean about that, but I do look at the major news only. So I look for, most important thing for me is NFP and FOMC, and usually those are the level I watch most of the time, and follow the market after that. So if the direction the week after the NFP is bullish on a pair, I will try to keep being bullish until FOMC or next NFP, sorry. EuroCAD, and guys, I will give you 5 minutes as usual at the end of the session to answer questions. So if you have any question, please wait for that, and we will take care of all the questions you have. EuroCAD going very, very well to the upside, and this is the weekly chart. As you see, we are getting close to a very important structure up here. We have like in about 240 pips we're gonna be there. There is nothing left on the way after this last week breakout, and it's an important level. Every time we reach that level, we've got the market moving in a very fast way to the downside. So we had this strong impulse down, and the last time we got another strong impulse, but it wasn't as long as this one. So still bullish, and you can keep going long until, if you're holding a long, then your target should be up here at this structure, because you're gonna have at least a bounce at that level to the downside, I think. And of course, if broken, then you see what we have, a little bit structure higher, another one, and another one up here. But since we're talking about next week, let's keep looking at this important structure up here. As you see on the daily, we are way from the 200 moving average now, and I think it is soon time to for this market to take a break, move a little bit lower, give the moving average a little time to get closer to the price. The last time we left the moving average so far away was back here, and if we measure that, it was like a move of 2000 pips here. Another time we left far away from the 200 was this one here, 1600 pips. But as you see, the market tend to go back and test that 200 moving average. So this time, how we do have, we are about 1100 pips, and to that top it's gonna be 1300 pips. The slope of the move, as you see, getting more and more parabolic as it happened here in the past. So we should keep our longs. If you want to add anything, then of course you want to wait for some retest back down here to this first structure and the trend line probably, and then take another long. Or if you get like any flags on 1 to 4 hour time frame, any corrections like this, and try to take the bullish frag trades on the breakouts. But when and if the structure got reached, then this is the level we're gonna try to short this, and maybe we're gonna get a very nice move back down toward these areas. Euro sterling, sideways, a bit boring, but if you know how to trade those moves, it could gives you nice amount of pips. Now I am looking at this consolidations channel. It is sloping a little bit to the downside. Last week we did touch the monthly R1 and almost reached this channel, been tested 3 times earlier here, and from the downside we do have as well 3-4 times test. So it could be a legged channel here. And as you see, the daily close here was not above these highs. But once again, when you got such a rejection late Fridays, you can think of it that all these traders that been going long on these moves here, swing traders may close the position on this last 4 hour candles to close the trades ahead of the weekend, especially when we have such lots of news was happening during this weekend, as we talked in the start of the session about the German SPD votes and the Italian election. So this particular candle does not have to be that we got new bears entered the market here. It could only be profit taken, but still, for next week, any test of retest of this channel and the monthly R1 could be a possible, at least a possible short-term sell back down toward monthly pivot point, or the 50% retracement of this move to the upside. So keep an eye on this channel, and if that got broken, then you see there is a lots of potential up in this after this correction ends. So very nice scenarios. I give you both the up and the down possibilities, and you play by the rules that seems good for your trading styles. Okay. Euro Jappy. Those of you who follow me every week, you heard me saying last week and the week before that I think this time this support may not hold. I told you that, guys. I told you as well, it is an important support. It was an important support in the past, and we had the 200 daily moving average at that level as well. We got some rejection, but the pressure was very strong and we got a very nice break to the downside. It did stop at this previous flip zone, as you see, an area of support and resistance here. This is a minor level. I think the market objective is to at least reach these lows down here or the monthly S1 before giving you any bounce to the upside. So something like this, this is a more strong support, but my bias will shift now because as many of you knows, the day we close below and hold below the daily 200 moving average for me is the barometer for changing the bias. Now we could get a possible retest of this broken structure or probably higher toward these areas up here. As far as we don't break and close above this swing high, it is a good area to try to take a short. You could have some wicks above it or stuff like that, there is no problem, but a close above it will break the downtrend. So for Euro JAPY, keep an eye on this structure. Could be an important level. Let's take a Fibonacci retracement and see what we got there. Not much at that level yet, so even if we add the 23.6, gonna be at this level, this broken structure, which is actually the better resistant this time. So we may not reach these highs up here, and what we only want to know that we never break above this one. So as first level is of course the broken structure itself, which is here, to try to take another short targeting the previous low, and if broken then we may reach the monthly S1 back down here. Euro USD, we've been watching the neckline last week. We broke that neckline, closed below it on Wednesday, as you see. But then Thursday, bullish engulfing candle. Friday kept moving higher, and now testing an important level where we do have the monthly pivot point. We do a retest of this minor trend line that got broken, and we do have this very important NFP week. I'm not sure how the market will react about the German votes and the coalition and the Italian votes. We're gonna have some news on that later tonight to know which party is winning and stuff like that. So it's very important that you keep your risk low on this pair. I think as far as these highs are not broken, we still have possibilities to test lower on Euro USD, but once again, these news we do have now may change a lot of things. So this structure up here is a short-term important structure. So any rejection, once again, we could target the lows back down here. If we get a break, any gaps today on based on those news been happening during the weekends, and that the price does hold once again above the structure, then there is a possibility that we do retest these major highs up here. As you see, that will send the price as well back above the minor trend line. So very important structure for a short-term scenarios here, that it, if broken, then there's nothing left toward until we reach the highs, and if we keep rejecting this level, then we may target lower. There is a possibility that we go sideways next week until NFP. That is not unusual that when we have NFP week, especially the EURUSD, start doing this until we get a break the week after NFP, especially on Monday or Tuesday after NFP. Yeah, but look at this very nice 200 moving average on the 4-hour, been acting as good support coming after this break. Here it was very nice respected resistance, got broken, retested as support, 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 broken now, and it is possibly retested as possible resistance again. So you can use the 200 moving average on the 4-hour as your possible dynamic resistance now, and look for possible break, possible rejection and continuation down, or if broken, then you can play this scenario instead. So another if then, as you see, lots of if then in my way of thinking. There is no need to guess and want to be right. Being right is not the most important thing. The most important thing that we make money. That's why we are trading. Sterling CAD weekly chart at a very important resistant level now, coming from these structures here. As you see, this high, when tested last time, it did send the pair all the way back down to these record lows, and now we are testing that important level again. The 200 weekly moving average is coming from above as well at this area. At that same structure, we do have the monthly R1 at this level here. So I'm seeing this important structure here to act as resistant, at least short term. So keep an eye on that. Add to that we do have bearish divergence on the RSI daily. Looking at it like this, you see that we do have lower highs coming on the RSI, and the price been doing higher highs all the way up here. So this ascending wedge now could be a nice scenario for a possible short from this very important structure at the monthly R1. I would love to see a daily candle that give us a blow off top, break above, kill some stops, and then back in the same day without a closing above the monthly R1. So any nice pin bar like this and then close back inside below the monthly R1, something like this, giving you this candle, that would be a great signal to sell it after the stop loss hunt at this level, because it is an important level. It's gonna be a crowded trade and everyone to short this area, and they usually do not like to have many winners with them on the way. So be patient, do not short the first touch. There is a very big possibility that we do have a blow off top here before we got the move to the downside. The second possibility that we break and hold above this level, and then, my friend, you know that if that happens, you can start looking at the highs of Brexit up here. Is the market ready for that yet? I don't know. Let's let the chart tell us what to do next week. Sterling Jappy, another pair that broke an important major support level. You see how old this level, resistant, resistant many times, resistant again, and now support. The major trend line coming from since October 2016 going here, got now broken as well. We're trading below the daily 200 moving average. Let me fix that once again. So as I said, it is now a very important structure as a possible resistant level now. below the 200, below previous support level. It did stop. We've mentioned it, this level in my trading room. I said this minor swing here may act as support short term at least, and we got a nice bounce from that. So now we wait for a possible correction higher before we take a short. The first level is up here, 147.50, or if it reach even higher toward this structure, then it is still a possible shorting possibility at the retest of the trend line and this broken structure up here. So two levels. The first one is the most possible for me, 147.50. We'll be looking at that level at first, since every time we've did that in the past, we've got nice move to the downside. I'm gonna be targeting first the previous low. Second is, of course, if this got broken, then we reaching even lower. Very important chart to look at for next week. Sterling USD. If we look at the bigger picture here and we go to the weekly, you see that when the market reached this 200 weekly moving average, we start making some corrections to the downside. If we go down to the daily and look at that channel, it's a very nice and legged channel we have here. 1, 2, 3, 4 time tested, so it is a legged channel now. We are trading above the 200 daily move average. It is still a bullish structure. Long term major structure is bullish. From the top of the channel, we got the channel started on this pivot and this pivot, and as you see on the test of that channel, we start channeling in another blue channel here to the downside. So I think we should try to short this pair until we reach these lower channel bottom here. At that level, we do have this important structure, as you see, that got broken. It needed a major candle to break this important structure. So this for me now is a very important support level. 1.36 is a very important support level. At that same area, we do have the bottom of this red channel, major channel coming from the downside. Monthly S1 at that structure as well. So this is the level if the sterling to keep going higher. This down here is the level of them all for a continuation. So keep an eye on these structure, on these channels. Now this previous low did act as support so far, and I am really willing to see a little bit more before we take another move to the upside. So if this to really test higher, keep an eye on this neckline here. Use your Fibonacci retracement tool, use your structure levels to look at for a possible levels to short it short term, but longer term, my friend, is down here, this structure. So this could be as well a possible impulse, flag, break, and then from here we're gonna taking the longs, if so, or a retest toward monthly pivot point and the 200 moving average on the 4 hour. At that same level, at the monthly pivot point, we do have the 61.8 Fibonacci retracement. That could be another level to try to take a short. Now, if you look at this range, I think you see we've been trading inside this very narrow move, as you see here on the 1 hour, broke below, broke above, holding here. But it is still 2 days of total range of 100 pips during these 2 days. So we're gonna get strong momentum move next week. Shorter term, you see this support level is now acting support again after we broke above it and held. So that's why I'm thinking that we may have a short-term bounce, strong bounce to the upside toward the monthly pivot point and then down before we reach the bottom of that important channel on the daily. Make this channel on your chart and keep looking at it, because it's gonna be a very important structure down here at this cross. Okay, I hope it makes sense. As usually, I feel that I explain more than I need from time to time, but it's important that you see what I'm seeing, guys. New Zealand USD, this possible double top never broke below the neckline. It is a level that we was looking at to hold as support. The 200 is coming from below here, may act as well as a possible support. On the 4 hour, as you see, we had a very strong leg to the downside, retracement and possible continuation. Now we still want to trade after some confirmations, guys. So when I draw this Fibonacci retracement of this whole leg, we see that the first reaction was now at the monthly pivot point and the 38.2, just below the 200 daily moving average. If this to continue lower, which I prefer more now since this pair been moving up for a very good long time. So if this to, the best scenario to short it is of course that we want to see this structure broken, retested, and then we have all the way back down toward these levels down here. Or else that we do have a deeper correction toward the 61.8 or the monthly R1. Still possible levels to look at for a possible shorting opportunities. So keep an eye on this lower structure now, lower range. You have this box here. Any trade above that will send it to test the 618 or the monthly pivot point and this neckline. And for me, the first and best scenario would be a break below and that we hold below to try to short the retest lower. That will confirm this break here, will confirm, if that happen, that we do break the neckline of this double top. And as you see, structure wise, it could go all the way back down to this neckline down here. USD CAD testing an important resistant level now, back above the daily 200 moving average though. So a bit tricky here now, yeah. As you see here, we were way from the 200 moving average. We moved sideways. We tested the 200 one time and got rejected all the way down, and now we broke above it. But still, that does not stop it from giving us some nice bounce to the downside based on this possible A, B, C, D. This is the bigger one. It's now completed already, as you see. And if we take a Fibonacci extension to measure that, you see that we do have now the 1.41 is broken, but just above that we do have this important structure. So we have A, B, C, D, and inside the CD move here, the red, we do have another smaller A, B, C, D harmonic pattern. And if we take that as well, both those have 1.41 at this important level here. So I still think that we may get a shorter term bounce at least here. Usually when you trade these patterns, the AB equals CD, you target the 38.2 as your first target and 61.8 as your second target, which is a very important structure now because this is a major low. But as you see here, on the way up, we do have a structure already at the 23.6. So depends on the time frame you're trading at and what you're looking for as a possible trigger. You may play it differently. But on the 1 hour time frame, we do already have some major bearish divergence going on. So this add a little bit of confluence for a possible entry here at these levels. On the 4 hour, we do have bearish divergence as well. Important resistance. So I still see there is a possibility that we get at least one bounce toward this level or the 38.2. Very low risk if we got another retest higher, double top on the 1 hour time frame. Could be a nice entry short this short term. It is a counter trend trade, be aware of that. And since now we're trading above the 200 daily moving average, there is a possibility that we now keep moving higher, guys. Look at this. After this major swing low here, we made another push to the upside, another major swing low, but we couldn't trade below these lows. So now we do have our first major swing with a higher low here. So this is an early warning that we may have a possible reversal and a continuation here, longer term. But short term, possible rejection at this structure here. Very possible that may happen on that completion of the ABCD pattern. USD JAPY broke last week on lower time frame below this important low now here at the 105.50, but then we broke in and closed inside on the daily. The trend is still to the downside, lower lows, lower highs. If this Friday candle was to close below the previous low, that would be much easier to say that we now will keep moving lower on this one. That didn't happen, and that could be another 4 hour candle or another couple of candles closing positions on the short at the end of the week. So on this time frame, we do have a break of previous structure. It is a clear break below that, but then we got a couple of candles back inside. This does not have to mean the new bulls that entered the market. As I said earlier, could be position closing that gave us this little bounce to the upside. Short time frame, if you look to trade this on shorter time frame, of course any retest of this neckline up here or even this first one here could be a possible level where we may see another bounce to the downside. Longer term, I still see there is a possibility for USD JAPY to reach lower, as low as the 100 longer term. But we broke this important structure and never really tested that level at the 108.50. So this may happen before any major move. But as you see, guys, break flag, another impulse flag, and this could be a start of another impulse lower. Any close once again below 105.50 on like 4 hour time frame. If we break and close below this structure once again, then I will keep selling. If we go and look at the futures of JAPY, you're gonna see that very nice call and very nice move I did publish this. Let me take these off. We were counting some range. We don't need them now. So we've been talking about the first test of 618, and that we've got exactly what we wanted to see, but we didn't get the break above the previous high. That is what I'm looking for, and if that happened, then I really could see the USD JPY heading toward 100, guys. So possible double top here, bearish divergence. We could have some sideways movement ranging here, because this month's pivot point range is actually a very wide range, and when that happened, we used to have some ranging markets. So that's why it is very important to keep an eye on this double top structure here. Important resistant, and if broken, guys, close above these previous highs, gonna send us even higher, looking at the Japanese futures, and that would be the opposite of USD JPY chart we've looked at here. So this is the opposite. We are looking at the break of this low, and if that happened, we're going lower. Daily time frame, the structure is still bearish, as I said, and you don't want to see this structure here broken. This high, as far as we are trading below this high at the monthly pivot point, we can keep shorting this pair. So this swing high now is important structure that we don't, if we see a break above that, then that may change the structure and give it at least a short-term upside. So keep an eye on this important structure. Monthly pivot point gonna be an important level to watch. And the last pair, Bitcoins. So Bitcoins, as I said earlier, 6,000 was a very important level to buy. Many of you did take the buy and send me some nice thank you messages. Now we are trading back above this 1, 2, 3 touch trend line on the daily, now broken. The price is holding above. We do have another possible trend line to the upside now with this and this higher low here. We do have another major swing high, which is very important. So you want to see if the market break above the 11,800 here, then we are reaching toward the 13K important structure as well. And if that broken, you see how much to the upside we do have. So these are the major levels here, up here, and after that there is much room to the upside. To the downside, we want to see it holding above the 10K. As far as that happening, you're still safe to long, because next structure gonna be 9K and so on and so forth once again. So, but you see it clearly, guys. Swing high, another swing with a higher low, and now broken trend line. We want to see this high taken out before thinking more to the upside. Yeah, very easy, very simple rules to follow. There is no magic in that. Yes, that was it, guys. The last pair was Bitcoins. Couple of minutes for your questions or any charts you want me to look at, and then we're gonna call it a day. I've been talking in about 1 hour and 15 minutes. Thank you a lot for joining me here. Lots of viewers today. Very happy to see that. I hope that you get some good ideas from these charts, and that I'm not doing it for nothing. That it can help some of you. Once again, if you do like those sessions, please hit the like buttons. that make me a lot much happier. And yeah, you can as well share this session for those who can get the benefit of it. So yeah, let me take some water, see if there is any questions. Otherwise, we're gonna call it a day. You're welcome, Uncle Gab. See you in the room, buddy. See you in the room. Welcome, Christina and Christine. Okay, guys, I don't see any questions, so I think we are good to call it a day. Thanks a lot, and see you out there. Bye bye.